Today, we're talking about how to create a cash flow system that helps you automate budgeting and your savings without the need for a budgeting app. In this example, we have a married husband and wife couple who earn $350,000 per year on a pre-tax basis. The husband maxes out his 401k and the wife maxes out both her HSA and 403b. After these savings are accounted for, plus paying taxes, their average monthly income from both paychecks would be $20,000 per month or $240,000 per year. The simple change that they make is rather than having their paychecks deposited into a bank account, which is what most people do, they deposit it directly into their joint brokerage account. This could be any of the major custodians like Vanguard or Fidelity or Schwab, you name it. They deposit $20,000 directly into their joint brokerage, and this couple thinks that they spend $13,000 per month on average. So what they do is they automate a transfer on the 27th of each month from the joint brokerage account to their joint bank account. In their joint bank account, they start with a buffer amount. So meaning it's just a starting amount that hopefully they never have to tap into. They start with about 1 month worth of what they think their expenses are, so $13,000. Now, after the automated transfer of $13,000 from the brokerage account comes over to the bank account, their bank account balance then would be up to $26,000. They started with a buffer of 13 and added an additional 13. After they pay all of their expenses throughout the month of $13,000, which are broken out here between their mortgage, childcare, student loans, and then kind of a catch-all everything else, credit cards, direct debits, travel, you name it, that buffer amount would go back down to $13,000. Now, obviously, it's not going to be an exact $13,000 per month in expenses, but as you repeat this process over several months, if you keep an eye on the buffer amount, it will tell you whether this couple is spending more or less than $13,000 per month. If this buffer amount is going down every single month, it means that this couple spending more than the $13,000 that they're seeding it with from their brokerage account. And the same relationship will happen on the flip side as well. Now, this couple does give $3,500 per month to a donor advised fund, which is beyond the scope of today's video, and then they ultimately give to nonprofits or 501c3s from there. So if they make $20,000 per month, spend 13 and give 3,500, that's a net 3,500 that will naturally accumulate within their joint brokerage account without having to make any extra transfers. And then what they can use that for is they could do backdoor Roth IRAs just because their income is over the threshold. They could contribute to a 529 for their kid. They could also enhance their emergency fund that they have directly within their joint brokerage, or invest in any individual stocks or bonds or ETFs or mutual funds directly within the joint brokerage. All of that is happening automatically through this system, and all of their expenses in this example are assumed to be on auto pay. This transfer is also auto paid, so everything up to this point is completely automated, and their savings will naturally accumulate where it's supposed to go in their brokerage account. The other great thing about this system is it's really easy to track what your income and expenses are over extended time periods, because we've separated where their income is going into this account, and then where all their personal expenses are being paid from, all out of the joint bank account. Notice that savings like Roth IRAs, 401ks, 529s, and even giving are all separate from the joint bank account. That way we've isolated just their personal expenses to be paid out of the joint bank account. What most people do is they have their income come into the joint bank account. They maybe spend some, they maybe give some, they maybe save some. And so it becomes completely impossible, and the data is extremely convoluted to try and be able to figure it out without spending hours going back and trying to reconcile all the data. So with this system, it's almost completely automated. The only decision you have to make on a monthly basis is what nonprofits you're giving to, which you could even automate that too, and then deciding how to invest the savings that naturally accumulates within your joint brokerage account It also gives you the opportunity to be able to easily identify what you spend on a monthly basis by tracking the buffer, or you could easily look at the account data because only personal expenses are being paid out of the joint bank account. I hope you enjoyed this video about how to create a cash flow system that helps you automate budgeting and savings without the need for a budgeting app.